Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be pulling up some live rates and we're going to be talking about bank statement loans as our deep dive topic here for today. We put the chat up on the screen, so feel free to drop a comment there as you tune in. We appreciate it, and we'll get started here in just a moment. Thank you everyone who came out to our big event this past weekend. In Miami, Real Estate Weekend Miami, had a great time. But now we're back into pulling up some live rates on these shows every morning at 11 a.m. Eastern. All right, I see some comments coming in. We'll get started in just a moment. Just waiting to go live on all the different platforms and give everybody a chance to tune in here. All right, looks like we are live on all the platforms, so we can go ahead and get it started here. We'll go ahead and take the chat off the screen, but keep dropping comments there in the chat, and you can drop any questions you have in the chat as well as we go through the presentation today. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and I'm joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We're a correspondent lender that specializes in non-QM loans. And what we do every morning on the show is go through some live mortgage rates, and then we do a deep dive into a different topic. Today's topic is going to be bank statement loans. So Jose, our sales manager with 28 years of experience, is going to take us through a deep dive into that loan type here later. But before we do that, we'll pull up some live rates and see what they're looking like today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and check out the rates this morning.
All right, let me switch my screen and we will check it out. Did look like some decent news this morning, so hopefully we will see that reflected in the pricing here. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We'll be able to see the live rates for today. It is December 5th, just after 11 a.m. Eastern. So all of our general programs are live here. And if you'd like a full breakdown of all of the fees and itemized loan estimate for all the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states. For the demos here, we'll set up a basic scenario so we can compare across the programs. We'll set the loan amount to $400,000. We'll set the LTV to 80% loan, 20% down payment. We're going to search for the absolute lowest rates we can offer at the moment. Typical request here. And we're going to compare our conforming conventional programs to FHA, which is usually the next best option. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs, such as the topic for today, the bank statement options. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are, just let us know. And USDA is only for eligible properties. If you do happen to be looking for one of those, just let us know, and we can quote those, no problem. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, as we do every morning, let's check out the rates. Awesome. Looks like one option dropped down to 6.5, which is a little bit different than yesterday. 6.5 rate for 2.5 discount points in cost. Puts our final APR at 6.8, so just a touch lower than our last episodes. We love to see the rates go down here. So definitely good news for everybody out there shopping. You can go ahead and count on those rates looking like they're going down today. Now, if for any reason our customer doesn't qualify for one of the conventional programs, typically we'll want to compare an FHA option. So we'll set up the exact same scenario and we'll select FHA this time. So even though FHA does allow more credit leniency as well as a much higher debt to income ratio, we're going to keep everything exactly the same so we can compare apples to apples here across the programs. So let's check out the FHA options this morning. And it looks like a touch lower than yesterday as well. 5.75 rate with 2.25 discount points and costs. Puts the final APR 6.675. So just a touch lower if our customer qualifies for both conventional and FHA. This is actually a touch lower, so definitely don't overlook that. And for our customers that must use FHA, these changes to the MI definitely have been helping out, as our FHA is a touch cheaper in this case. Definitely a good option, and we love to see the rates go down. Now, where we love to specialize is if our customer unfortunately doesn't qualify for either FHA or conventional. Many other banks or lenders will unfortunately have to deny that customer, but that's where we have over 5,000 additional options here under expanded guidelines, also known as non-QM. So when we select this option, it allows a new field here for income where we can change our income type. So full doc is what we have to use for conventional and FHA. That's 2 years of tax returns. So if we're not able to qualify with 2 years of tax returns, we'll typically choose one of these other options. We have asset-related programs, business bank statement programs. The investor programs are just for investments. Personal bank statement 12-month is the one we use for our demo, and obviously Jose is going to go into a bunch of different options under the bank statement options here. We also have RSU stated, VOE, 1099, and P&L, and as well as CDFI no ratio. So tons of different options here. For the demo, we always select our 12-month personal bank statement, and that's our most popular program for our self-employed borrowers, who are typically the customers that may have trouble qualifying with 2 years of tax returns. So instead of using tax returns, we will use just their last 12 bank statements to determine a debt-to-income ratio, in this example, of 40%. No tax returns at all, just their cash in the bank. So most of our self-employed borrowers, if they have write-offs on their tax returns, can qualify for much higher income using this method and can therefore get that home they really want. So let's check out the bank statement options today. All right. Best one at the top here, 7.625 rate, 2.375 discount points and costs, puts the final APR 8.053. So just about 1% higher there than conventional. Conventional's definitely been coming down. Non-QM, remember, typically stays nice and even. We were beating conventional for a while there. Now it's a little more normalized where it costs a little bit more to use bank statements. Most of our customers that must use these programs, a slightly higher APR is no problem. Now notice there's dozens and dozens of variations here. Some of these may allow different credit events, bankruptcies, foreclosures, obviously a little bit higher rates and costs, and some may allow us to calculate the income a little bit differently, which probably Jose will go over a little bit as well. A lot of flexibility here with these hundreds of variations. So please get with our team to find the best options. And before we go into Jose's deep dive, we always want to do live rates for investment properties as well. We love to work with investors, first-time investors, seasoned investors. We have tons of options. We'll set the demo to the same setup here, 80 LTV, 20% down payment. We will set the system to look for the lowest rates we can offer for our conforming conventional and our non-QM expanded guidelines. Remember, FHA, VA, and USDA do not accept investment properties, so we just compare these two here. So we'll start with conforming. Everything else is going to stay the same as our other demos here, so we can check out the conventional investment options today. All right. Best option for investments. Looks like it's gone down a touch as well. 7.125 rate, 3.375 discount points and costs. Puts the final APR at 7.535. So great option here for our investors that do qualify full doc. But many investors also typically want to check out our non-QM options, which are our most popular programs. So for the same scenario, let's go ahead and set this up. And this time we will select our expanded guidelines options. Oops. And when we select this, we have a couple new pop-ups here. First is the income option. So for investment properties, the most popular option by far, and our most popular loan product is our DSCR loan. It stands for debt service coverage ratio. Doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rents to determine the DSCR value. If the estimated rents can cover the expenses of the mortgage, the PITIA, and the property cash flows monthly, that's a ratio of 1.0 or higher. We also have ratios allowed under 1.0, but for the demo, we'll put the highest value here of 1.5 so we can see all the different programs pop up. And finally, on the DSCR options, or at least the investment options for non-QM, we must select a prepayment penalty. 3 years is standard for these programs. We could select 0, that will cost more and limit what shows up. We could also select 5, which will save our customers some money, but not all programs allow. Since 3 years is the most common, that's what we'll use here for the demo. So let's check out the DSCR options this morning. Ooh, wow. Some good options here. 7.375 rate for 3.375 discount points and costs. Puts a final APR at 7.903. So definitely seen some drop here in DSCR. Usually, remember, non-QM and DSCR rates usually don't change daily and react daily, but we do see some updates here from last week, which is great. And we are very close to conventional. Remember, conventional was 7.5 something. Here we have a DSCR, no income, no employment needed. No documentation on that for just about 0.4 higher. So we were beating conventional with a DSCR for a while. Now conventional's a little bit more reasonable. However, I'd say 95 to 99% of investors will still choose a DSCR option for the flexibility. And if we scroll down, notice there's dozens of different versions of DSCR, some at higher rates and costs. May allow bankruptcies, foreclosures, other credit issues. Some may allow other ways to calculate income, short-term rental income, very popular request. Some may allow different types of properties that would otherwise not be eligible. So tons of different options here under DSCR, and we're happy to see the rates go down across the board. So let me switch my screen again, and now we will get into today's deep dive topic with Jose Gonzalez, our sales manager with 28 years of experience, the master of non-QM options, with our most popular option being bank statements. So Jose uses this tool daily, recommends this tool daily for our team. We love having these non-QM programs at our disposal. So there's tons of options as we go through the demo under bank statements. So Jose will have some specific examples, or more specific examples, I should say. Our live pricer is always a general example there. So Jose, if you're ready, why don't we talk a little bit about what you got set up, and then we'll pull up your screen.
Sure. Good morning, everybody. Thank you for joining us for Daily Rate Slide with the Mortgage Calculator. Great to be with you here this morning. Sorry, I'm a little bit hoarse. Today, did a lot of talking in our conference over this weekend, a lot of networking opportunities. Definitely appreciated everybody that showed up, had a great time. So these options are for self-employed borrowers. Depending on the scenario, you would either be going with a bank statement option, a 1099 option, or a profit and loss option. Bank statement is a little bit more flexible because the 1099 option requires a 1099. Bank statements is just bank statements, and the P&L is usually our bank statement workaround when we have things like declining deposits or unverifiable large deposits. So those are some of the challenges that we get with our bank statement loans that are resolved by the P&L. And do remember that the 1099 option does allow you to use up to 90% of the income on the 1099, which is most likely higher than what you will be allowed on any bank statement options. Bank statement options are typically the default expense factor is 50%, meaning that you will get 50% of the deposits. However, you can raise that up to 80% with a letter from the tax preparer, but that is also going to depend on the business type, because in some cases, the business types are already on a grid where if you have that business type, they are automatically going to assign an expense ratio to your business. That is not with every non-QM option that we have, but some do use that. So please be advised. So let me share my options with you today. Our highest LTV on non-QM is always 90%, which is our max LTV for our bank statement option. So here we are 90%. Lowest cost option is 10.375, and our lowest rate option 9.25%. Now this is 85%, same setup, just a little bit lower LTV. So we do drop the rates to 8.874 is our lowest cost option, and 8.374 is our lowest rate option at an 85%. And at an 80%, it gets even better, as this is our more traditional loan to value for this product. So 8.625 is at par, our lowest cost option, and 7.625 is our lowest rate option. So now I wanted to throw a little bit of a twist here, wanted to increase the loan amount here, purchase price for our audience out there that has some large transactions that they're considering. Right here, this is for a $2.9 million purchase, 64.5% LTV. To get the best pricing, you're looking at 8.125 with a lender credit and 7.25 lowest rate option. Now, same loan, just raising the LTV.
Can you zoom in a little bit, Jose?
Sure.
I think you got it zoomed out a touch. Yeah, that's better.
All right. Same loan, 2.9 million, but now we're at 68.97 LTV. So this takes it slightly above $2 million. And we're still amazing rates, looking at 8.125 with a slight cost, and 7.375 is our lowest rate option. Same scenario now at a 70% LTV. So we're still 7.99 is our lowest cost option, 7.374 lowest rate option. And now we get the scenario to 75% LTV, and we're still at 8.375 at par and 7.375. This is like roughly a $2.2 million loan. So we do nice loans like that at the mortgage calculator. And our investment purchase, 1 unit, maximum LTV is 85%. And you're looking at 10.125 lowest cost option, 8.875 lowest rate option for our investment property at the maximum LTV. And 80% purchase. Now we take it down a little bit so I can show you again the relationship between loan to value and rate. So here, 8.875 has a lender credit, and 7.49 is our lowest rate option. And my last two options here are for cash outs. Maximum cash out on a primary bank statement is 85%. So you're at 10.5% lowest cost option, 9.75 lowest rate option. And for our last example here, bank statement investment, 80% LTV is our highest LTV possible for investment cash out, since 85 is our highest LTV for the purchase on investment. So 10.375 is at par, and we can buy that down to 8.875 for this 80% LTV cash out bank statement option.
All right, great options there. Any questions? So I think we can go ahead and wrap it up here. We appreciate everybody tuning in. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and do a deep dive into a different topic. So thank you, everyone, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.